Hey everyone, it's been a while since I've done a prop firm video, but a brand new one just opened this year and it's a pretty unique firm and I think it's worth talking about, and we're doing a giveaway. The Futures Desk launched this year and they have a very unique way of doing things where you kind of pick your own parameters. So you get to choose how many contracts you use, what your profit target is, what your risk is. So if you want to have less or more, you get to kind of pick that, and then that like changes the price of what you're paying, but it gives you the freedom to sort of set it up how you want, and it's very unique, and I think it could be a good thing. I'll have a link to join the Futures Desk down below, but they've been cool enough to partner up with me and do a giveaway. So we'll be giving away two $200 credits, kind of think of it like two free trading accounts, but you'll get a credit that you can use to redeem inside the Futures Desk. It'll make more sense when we go over the firm and kind of how they have their structure set up. But when doing the giveaway, in order to win, you're gonna have to subscribe to this channel, follow me on Instagram. Post really great tips and tricks and trade reviews, and it's a really good resource for you to learn from while you are working on these prop firms. The link to follow my Instagram will be in the description below. So like and comment on this video, and then after 30 days, I'm gonna go in and I'm gonna randomly pick two winners in the comments, and then I'll message you on Instagram, get your info, and we'll get you set up with those $200 credits. Now let's go take a deeper look at the Futures Desk. So this is a Futures Desk, and essentially you design how you want to set up your funding. So they don't have unrealized drawdowns. That's always a huge plus. You can start with end of day or static. You can trade up to 12 contracts or more. You can change this, and how expensive it is changes. We're going to look at that in a second. But for those of you that are new and you want to start out really small, you don't have to spend so much money. And then if you are maybe a more seasoned trader and you want to have a bigger size, then you can choose to do that. They only have one failing rule, which is the typical don't go past your total drawdown. They have a soft daily loss limit, which means if your daily loss limit is $1,000, if you end up losing like $1,015, you're not going to blow the account and have to reset because you're still above your drawdown. So you can go past your daily loss limit and it's not going to make you reset the whole thing, which is kind of a good thing because sometimes that happens and you just go on tilt, you make a mistake, but you come back the next day refreshed and you don't have to feel like you've completely lost your progress or have to reset. So I think that's good psychologically. And then they have their own journal built in. So if you haven't gotten a journal yet, you can kind of save money on that because they have a way to track your trades. This is huge. I track all my trades. I trade on live right now, so I track everything, and it's been game changing. So I really think this is a good thing to have built in because it kind of forces you to really take note of what you're doing and learn from it versus just waking up, trading, and then kind of seeing what happens after. After you pass your assessment, you can start earning immediately. So they'll put you in their coaching and they'll eventually move you to a fully live brokerage account. So this is a really good thing. I've always talked about this with prop firms. Firms that will move you into a live account are a green flag. If firms are fully on sim only, then that means that they're always paying you from like the losers and you'll never be able to trade the live markets. So like a more legitimate prop firm is going to put you in the live market eventually after you prove yourself. And so once you transfer to live futures, you can get daily payouts. You can trade with more risk. You build a relationship. They give you a deeper seat at the table, and then you're on a K1. So a lot of green flags in that sense, and you get better commissions too. So I like all of this. I only review prop firms that I feel are like viable and legit. I get hit up, even as small as my channel is, I get hit up a lot by like random prop firms and like Forex firms from other countries. And I usually ignore them because I don't want to review a firm that's sketch. So this one is good, and you can, I mean, for the US residents only to partner with. So there's a lot of green flags in that sense. Now, pricing. This is where it differs from every other firm. So they have their built-in trading platform, and then they have a Rhythmic connection. So, and their built-in platform is cheaper, of course. And by the way, if you use my discount code, which is full-time trader, right in there, it's going to always give you the discount. So, for example, I just changed the slider. This is $469. You put the code in, you're going to get like $100 off. So, full-time trader is the code you want to use. But let's say you do want to do Rhythmic and you want to end of day. This is going to change as you change these sliders. So, if you don't want a 2,000 max loss, let's say you want it to be 2,500. It changes your profit goal and your daily loss limit. Let's say you want it to be 1,750. changes your profit goal and your daily loss limit. And then you can also trade how many contracts you're going to use. Most of you, and especially if you're newer or if you're still kind of getting your feet wet, you shouldn't be trading with more than a couple, like one mini, to be honest. But if you're going to only trade with 2 minis or 3 minis, you can just put this down to 2. Like if you know I'm never going to trade more than 2 minis, I don't need to trade that heavy risk yet, then you can change this down and then it's going to make the account cheaper for you versus having it at 5 minis and then you never even use that much size. So you can put this down, it's going to save you money. And then if you want to pass in just 5 days, if you're a seasoned prop firm trader and you can pass quickly, you can do that. If you want to take your time and there's no rush, then you can kind of put it up here to like 12 or 11 days and save money in that sense. You can do a practice only, which will be $39, or pass and go to live. Then they have these presets: starter, popular, premium, which you can kind of pick. But again, you can come in here and just decide what you want and what's going to work best for you. And if you want to have more max loss or you want to have less max loss, less contracts, you can change all that and then go in. They have uncapped daily payouts. There's no minimum days. There's no consistency rule. You can get to a live brokerage account. There's no minimum hold times. They allow algo trading, bond trading, and then there's discounted commissions. So the cool thing about new firms is that they haven't really, a lot of times firms are like, if you've been doing it long enough, they kind of like start changing their rules and like messing with things like the deeper they get into it. So the kind of good thing about the new firms is that they have a lot more favorable setups to traders. So take advantage of it now. You can join their Discord. I think they have like 5 or 6,000 people in there. So there's a pretty good group following already. So it's new, but it's not like this obscure firm that doesn't have anyone following it. So it's got liquidity. And I really kind of like just how you can manually change everything. I think it's a good setup for a lot of people because some people just aren't trading too many contracts and some people just aren't in a rush. And then if you are in a rush, you can, make it minimum days and up your max loss limit and then up your minis. Now, if you're thinking, oh, this one's really expensive, why don't I go trade another firm that's really cheap? There's no unrealized drawdown and you get what you pay for. If you are someone that wants to go to live and be able to pull money out of a prop firm and get daily payouts and stuff, like this will get you there because they put you in a live brokerage account. So you shouldn't have this mindset of, I want to spend $30 on a firm and then try and pass it in 1 hour and then get a bunch of, like, you should be like, as a live trader, I'm not trying to, trade max contract size and do things really, really fast. Like it's all about, like they put your daily goal right here for a reason, right? Like if you change how much you need to make each day, 12 trading days, you only need $292 a day. You can get that with 1 mini. And this is all you need to do, $300 a day. You don't have to rush the process. So it's a bit more expensive, but that's probably going to keep you from, for lack of a better term, being stupid. A lot of people struggle at trading, and it's because of the psychology, and they don't learn from their mistakes. They come in, they blow an account because they're trading 12 minis, and they've never handled that notional value before. And then they're in here trying to make, $2,000 a point on NQ or ES. It's your mind's not ready for it. You got to start small. The more efficient you trade, the better you're going to be in the long run. You don't want to come in, blow an account, and then pay the reset fee, and then go back the next day and then like do the same thing, like trading with max size and no stops. I would never trade max size and no stops in my live account ever. I have a defined stop. I have a hard stop, and if it's a mental stop, my finger's on the trigger because if it hits my mental stop, I'm out. So these are all things you learn in practice, but that's the futures desk. So I'm going to go over and I'm going to show you a trade that I took today. Just going to give you like the thought process of how I trade, and like maybe that you can learn something from this. So, it's a new month, it's the new quarter, and I was watching this low volume area from like 602 to 625. So we can see it right here. You can see it from right here, and there's this big move, and you can see this on a volume profile. Like even if I think if I pull up like a TPO. You can kind of see the low volume here. This is 2 sessions worth, but on this session it was really low, but you can kind of see it right there. So I was watching for this area to defend and for dips to hold, and 602 represents Friday close. So it was the Friday close and it was the Friday low. So it was a significant level, and you can see the consolidation right here. So I'm watching this level in this area, and during this drop, let me pull Bookmap up. I use Bookmap, which is a really good trading tool. So, and if you don't know what this is or you're confused off of this, I have a order flow series I made, and I'll put that link in the description below as well, going over how I trade off of footprint charts and the Bookmap order flow. But this is that volume profile. This is that drop at 620, right in here in this area right here. We dropped down and we left a zero print, which we can see right here. So 446 contracts aggressively hit the bid, market sells, and there's zero on the ask. So this is a zero print. I watched these for years. I know other traders talk about zero prints, but I've known about these for years. Unfinished auctions, they're great points in the market. So and trade, they always end up trading out. Think of it like a gap fill. People always say like gaps always get filled, or they tend to get filled. It's zero prints are the same way, but they get filled a lot quicker. So this big drop happened, and then we had a large buying right here. So anyway, I'm gonna fast forward here. So this happens, and again, trading is about being patient too. All right, I was looking at 56.18. Let me go to my intraday thoughts. So while this was happening, I'm watching. We had the news come out. I go watching the bonds because they've been inversing the market. So I'm caution longs on this sell-off, and then it's looking kind of like it might range today. So I'm thinking like if we get up to the 50s, which are right here, I'll short, and then if we get down to the 18s, which are the Globex low, then I'll buy it. And so we blew past the Globex low, which were the 18s. We made that zero print, which I just showed you on Bookmap, and then we're coming down into 602, and I'm watching for 602 to test. And I know that there's a zero print at 2150, which I marked. So in this area, I'm watching now. And again, it kind of started to base right here. And I'm thinking, is it going to hit 602? Should I get in long now? I don't want to miss this trade. A lot of trading is being able to avoid bad setups or just having the patience and discipline to wait for the level to hit. Sometimes that means it misses your level and goes up, but other times it means you get stopped out. So it comes down into my level, which there is a demand zone here at the bottom of this low volume node. So just to recap the context, we have a low volume area, there's a demand zone down here, and then there's a big key level, 602, which was the prior Friday close and the prior Friday low. We sell off into this area, and then I get long at 602 with a stop under 6,000. Now, I was watching two things during this, so I'm going to like scooch over to 602. All I saw on Bookmap, here's the area. So what Bookmap shows you is the level 2 orders waiting, and then the bubbles are just aggressive buys and aggressive sells. So these are market orders. The circles are market sells, and the green circles are market buys. And these horizontal thick colored areas are the level 2. So price sold off. You can see these bids getting filled right here, these colored lines. So those are bids getting filled, passive buyers. Someone is on the level 2 on your limit buys getting filled by these aggressive market orders. Then you have a bid rebid here. So there's 211 contracts that were waiting right here to be filled. And I didn't have it. I can't pull up the DOM and show you a replay, but I took a screenshot of the depth of market at 6,000. So this was like, I think it was like 250 or 300 at the time, and I saw a bunch of orders above it. And so there was thick liquidity. I saw them getting filled and like moving down. So I got in at 602 up here, and my stop's at 6,000 because I know if price comes back down and hits this area, there's going to be buyers waiting to get filled there. So it's a good chance, even if it came back down to 6,000, it might support. So I had a mental stop. I'm not sure going to hard stop at 6,000, but that was my thought process. It never did. I got in at 602, and then, I mean, within 1 minute, I had my stop at break even. When I go up about 6, 7, 8 points, I put my stop to break even because I'm never going to let a winner go red on me. So I got in at 602. I mean, I bottom ticked the market. At the time, I didn't know. I mean, this is what it looked like at the time. But I got this big shoot up. My stop's at break even now, and then I'm going for the 2150, and I scaled out the first part of my trade at 612, so I took like 10 points off just in case. Again, it was a strong selling. You can say I can say maybe I didn't have to do that, but I took some profit. But then I held the rest of my trade until 2150, and then I'm getting about 19, 20 points, which was a pretty significant day. And for example, if your profit target is 3,000 in the futures desk, 3,100, your profit target's 3,100. If you're trading three minis on a 2 point risk, that's $150 a point. So you're risking about $300 of your drawdown, and then 20 points is $3,000. So that one trade, you pass the evaluation. Or if you're in the account, I mean, you made $3,000. So if you are using the order flow correctly, and if you're looking at the market context and being patient, whatever your strategy is, this is mine. I'm just showing you what I do. I'm hoping that you find value in it. Maybe it's something you want to get into, or maybe it just gives you a new perspective on your trading and it helps you out. But I'm waiting for my demand zone to hit, and then I'm getting in, and then I'm watching the order flow to sort of mitigate my risk and then confirm my entry. I get in at 602, and then aggressive buying steps in afterwards. You can see it, all these green bubbles come in and then shoots the market up. And I mean, this thing ran up like 90 points from that low, and that's a bottom tick. So, I mean, I could have held it even longer, but 20 points is pretty significant for me, and that's what I go for. That was a trade today. I post all this, in my Discord. I do a pre-market plan, and I post my intraday thoughts and what I'm thinking, what I'm seeing in the market. And if you're interested, you can join the Full-Time Trader program. I'll have a link in the description below. You can check that out. If not, you can check out my order flow series for free on YouTube, or just follow me on Instagram, and you can see all the tips and tricks there. But that was my trade for the day. It was a pretty good session. I hope you got some value from that. And then that's the futures desk. So definitely check them out. Use the code to get your discount. And then remember to subscribe and follow me on Instagram so you can get the giveaway. Two $200 credits to apply. I'll pick two winners. You can apply those $200 credits. There's going to be two of you. And I'll get your info from Instagram, and then the futures desk will set up your codes, and then you'll be all set. Thanks for watching. Hope you learned something, and good luck on the giveaway. I'll see you in the next one.